Welcome to Al Stock Trades. In this video, we're going to be doing an intrinsic value calculation on the Clover Health stock. Now, it's been a while since we've done this, so please share this video so others can see the beautiful growth rate that Clover is going to experience in the next 10 years, okay? So without further ado, let's get started. So as you can see, we're going to be taking the revenues from Seeking Alpha. However, I want to remind you, I'm doing this on purpose. 2021, the revenue is incorrect. I don't know why. It's been, we're almost halfway done with this year, and Seeking hasn't corrected that, and then they're giving out, telling you essentially, oh, it's not, they're saying it's good now, but they used to give out opinions saying, oh, it's a sell, when they don't even have the actual correct data. So just understand that. So people that are on our Discord or on our Mastering Stock Market course, to access this information, all you have to do is type in Al Help. This is our proprietary technology here. We can just go in and type in Al SF Help, and then you would get in the Al statements. And as soon as you do that, you can go ahead and type in Clove, and you would get the statements for Clover Health. And as you can see, for the revenue for 2021, we're at 1.47 billion, right, versus 1.3. So they're off almost more than $100 million, which is a big freaking deal. All right. And if you want to do more DD, we'll take you in any stock you want directly to the SEC filings, and you can go in and do your due diligence and look at all that data. But for the purposes of this video, we're just going to use this number. So we're going to go in right now, refresh this intrinsic value calculation, which you can find in our Mastering Stock Market course link down below. I'm going to go ahead and essentially give you guys a beautiful way of how I do this. So we're going to go ahead and take a look at revenue, but we're going to go and put years on top. We're going to do estimated free cash flow, and then we're going to go ahead and type in the years, 2018, 2019, 2020, 2021, 2022. They're expected to make $3 billion this year. In fact, they said around 3.4 billion, but we're going to just do 3 billion. For the estimated percentage, we normally do 7%. We're going to do that right now, but I'm going to shift it down to 5% to be a little bit more conservative. It doesn't change our price target. It just it changes the upper and lower bound ranges, okay? So once we do that, we're going to type in the revenue, like I just showed you where I got it from, 281, 454.7, 690, 1471. Oh, nope, 1471. There we go. So now we're going to go in and type and do our multiplication here of taking 7%. Kind of tedious, but this is how things get done. The math tells you a story. Okay. So once we do that, we have the numbers. We're just going to take these numbers and we're going to implant them here. But before we do that, let's go ahead and take a look at the year. So 2018, they made 281 million. 2022, we're expected to make 3 billion. So they're growing on average around 81%. Now, they're actually growing 300%. I don't trust that number. I don't think they're going to do that for the next 10 years. In fact, I want to be a little bit more conservative. If we take 75% of 81, it's around 61. So we'll do 61%, right? You could do you can keep the 81 based off of their numbers, but we're going to go ahead and shrink it even more, okay? It just gives a better target, right, of where you think the future will be. So we're going to put the estimated free cash flows, the numbers here, 19.67. And we're going to divide by the number of outstanding shares, which is 470 million with some change. So as you can see, we're going to type in Clove here. Always need to type the ticker symbol here so it calculates the percent upside for you, as you can see. And this is great. You can take like a screenshot of it if you're on the Mastering course and keep it in your profile so you can constantly do this. It's a great way to organize. So I want to be very clear. This is hovering anywhere between $56 to $125. Again, my price target is actually $48, and I sustain it at $48. At least this is just for me. Again, I'm not a financial advisor. Make sure you do your own due diligence. Now, we're going to go in now and do 5%. Again, any good company, usually their revenues is around, their free cash flows is around 5% of the revenues. So just keep that in mind. We're going to get a better idea next year, 2023, because that's when they become free cash flow positive, and then we'll be able to calculate the actual percentage, and we'll have a better grasp of the company. But we're going to go and type the numbers in of 5% to kind of give you the ranges. So 22.75. there it is. So this stock will hover anywhere around $40 to $89. Okay. Now you can be a little bit more safer. You could take 20% of the margin of safety of the bear case, and you can just that can be your price target, which is around what, $33. But if they're continuing to do exactly what they've been doing and grow, I personally think $48 is a definitely fair, undervalued price from the base case. And once the economy fixes itself, and about 2 years from now, we're going to look at 2024, 2025 as a beautiful year. This stock is so undervalued. It is unbelievable. We're looking at literally 17 times your money for the bear, 25 times your money for the base, and 39 times your money for the bull. I mean, that is remarkable, guys. That is just remarkable. You put 100,000 now, that's what, 3.9 million. So it's really beautiful. You could kind of think of Chelsea Clinton. She got in around 275, and she put around $250,000, and most likely she's probably going to hold until let's call it $100. Chelsea, she's going to be sitting on some pretty cool gains. Let's call it just $89 she'll sell. That's what is that? Times what was the percentage again? 31 times her money. So she's going to be sitting around this much money. $7.7 million just from a $250,000 investment, if I recall correctly. I wanted just to call your attention, guys, really quickly. So we got our intrinsic value here, but I wanted to show you guys quickly for the people in our mastering. I recently updated this. Now we have sector rotations, so you can cut out a bunch of stuff and keep healthcare and technology, and you can see like where things are going. Is it creeping back up? Energy's falling down. Different time periods to show you different sectors, and you can see healthcare and technology are on the rise. Likewise, if you want to follow the United States Congress trades, you now have access to good all the senators. You can put the senator's name, the ticker symbols that they own. You can see what's going on. You can look at the most successful senators and their gains. What's cool is you can look at the insider buys and sells, and you can see that energy. The news is telling you go ahead and buy energy, right? But why is it that the insiders of these energy stocks, they're selling? And every one of the insiders for the technology stocks are buying. Okay, so you can go ahead and search all these things. So just be mindful, understand that you're going to have to do due diligence in order to be successful in the market. And I hope that this video was very helpful. And I'll see you on the next one.